I want to introduce Matt Bennett. Matt Bennett is from Windsor, Illinois. He's a farmer and former grain elevator owner. He is a Channels Seeds grain marketing consultant and holds a series of 3 brokerage licenses doing business through agmarket.net. He specializes in formulating risk management strategies for corn, soybean farmers, and livestock producers. Matt analysis and commentary on grain markets appears on various TV and radio stations across the Midwest, including Ag Day, U.S. Farm Report, and the Agribusiness Today. He's a graduate of University of Illinois. Matt and his wife Tiffany live on a family centennial farm north of Windsor, where they raise their 5 children. He owns and operates 3,000-acre corn and soybean farm with his father while raising 60 head of registered Angus cows. Please help me welcome Mr. Matt Bennett.
Thank you. All right, the importance of a marketing plan in good times and bad. We've kind of went from bad times to good pretty quickly here lately, haven't we? Or better. I'm not going to say it's good just yet, but better. How many of you guys were at the meeting last year? Okay. And last year, you guys remember kind of everything we talked about? And so I assume you guys went home and made some good marketing decisions for the 24 crop. Anybody? Some? I didn't know what the market was going to do last year, but this year's a little different, okay? Up until the last several days, last year, you had a chance for a long time, to market with some meat on the bone. This year, the last several weeks haven't been real fun, and then finally here, this January report changed a lot of things. I'm going to move pretty quickly to make sure we can get to lunch on time, but essentially, or the corn and bean lows in, I keep putting this in here, and the reason why is because if you would have asked me before the January report or the corn and bean lows in, I said, I don't know. I would have said, I do not know. This is a tough thing to say. Then you come in here with the January report, and what happened? We extracted a lot of stocks. 198 for corn, we extracted about 90 for soybeans. It changed the game in some ways. Clearly, there's been other things happen since then, but that report was a pretty big game changer. What has changed? Well, we've lost a lot of stocks, first of all. Second of all, what continues to change today is that you've got a fund activity, which we're going to talk about in a little bit, where the funds continue to buy commodities. And that's a really good thing to see. The funds are buying corn, they're buying beans. They're really buying a little bit of everything whenever it comes to commodities. And so when the funds are buying, typically the market moves higher because they can push around the market pretty rapidly, especially with the volume that they use. And then risk management's more than just pricing your corn and beans. And so I'm going to watch this table a little bit. Guys, how many of us did a pretty poor job for the 23 and 24 crop of locking in our inputs without selling some corn? Anybody? Here's the thing. If we go back and revisit this, and I don't want to Monday morning quarterback it, but it is a point that I want to make through the presentation. For the 23 crop, most of us prepay about Farm Progress Show before harvest, correct? A lot of us do. What was the price of corn when we were prepaying 23 fertilizer in the fall of 22? Do you guys remember? About $6. Okay? Clearly, the market went down throughout the year. We had very little chances to market at that again. For the 24 crop, Farm Progress showed 23. What was the corn market looking like? About 5.25. Okay? And so a lot of folks said, yes, I understand the market went down throughout the year. I locked my inputs in too high, but this can't happen 2 years in a row. And then what happened? The exact same thing happened 2 years in a row. So bottom line is we've got to manage risk with a heck of a lot more than just the price of corn and beans. We've got to be able to market whenever we're buying our inputs. Last thing is, what adjustments do we need to make? Fortunately, this isn't as, 5-alarm emergency as what it was a few weeks ago. Okay? We can live with these prices a little bit more today than what we could, let's say, before Thanksgiving. It was pretty rough looking. Let's just be honest about it. Okay? But still, I am not of the opinion that we need to be saying, hey, now we've got $5 corn on the board. I'm going to go out and buy this and buy that. I'm still of the opinion we got to tighten the belt. I think that this downturn that we've seen over the last several weeks, yes, we're going up right now, but guys, there's been times in the past that we've gotten ourselves bullish when the market's rallying and it hasn't worked out so good for us. And so I think we need to be very cautious moving forward. USDA report, I've got a good joke for you to start with. When I die, I want the USDA to lower my coffin so they can let me down one last time. Now, how many of you guys say, well, that doesn't fit with the January report? January report was bullish, right? So who was upset about the January report? People who decided to sell a heck of a lot of corn across the scale because the USDA said we had a 2 billion bushel carryout. That's who's upset about the January report. And so I'm not picking a fight with the USDA. In fact, they asked me to come speak at the USDA Outlook Forum the 27th and 28th of February. I said, do you guys care if I make a joke or two about the USDA? And they said, no, you can do whatever you want to do. I don't want their job. But that was a pretty big change of events, guys. 7 or 6 straight reports we have dropped stocks. And so it was pretty tough for some people to take, okay? But you look at price summary at the upper right-hand corner. This is the second year in a row I've been showing you this. We've got a deflationary environment for every single commodity we grow. All right? Now, that's what the USDA said in January. What's this going to look like for the February report, which is usually a very benign, quiet type report? I think that they're going to start ratcheting up the cash prices that they're going to forecast. Okay? Now, is it going to be to where we're going to see positives year on year? Corn was only 30 cents below. Okay? I'm not so sure that you don't finally see corn get back to the point where, hey, we're in more of a what you would call inflationary type environment. But a lot of things are going to have to continue to fall in place for that to happen. Principal crop acres, I've been talking about this a lot. If you look 2015 through 18, were those historically profitable years? They were so-so years, right? You had just come out of really high prices, and some of those years were actually fairly rough. But you had acres clear up there. Yes, you've bounced around. Of course, you jumped up in 2023. Why do we go down in years like 24? Principal crop acres typically shrink whenever you're in a situation the profit margins aren't good. And that's why we went down in 24. But why did we only get in 23 up to the same level that we were at in 2015 through 18? Well, the answer, in my opinion, is that we've got less tillable acres to plant today than we've had before. We continue to lose tillable farm ground. Yes or no? And so I'll just throw this out there. We have a farm that butts up to Windsor, which is the community I live closest to, all right? It comes up to the edge of town. 2 blocks north is a substation. Who do you think I've been hearing from? Solar. Every solar company in the country, apparently. And they send me my plat maps. And if I give them the time of day and talk to them, they know how much I paid for my ground. I paid $4,500 for this piece of ground, and the latest offer that they've given me is $3,300 an acre a year, plus 2.5% each year. Now, if I ask you guys, should I do that or shouldn't I? Some of you will say, you're an idiot if you do it. And some of you will say, you're an idiot if you don't do it. I currently have got I don't have any sort of a deal with them, okay? And I don't know that I'm going to. And coincidentally, it's my best piece of dirt, of course. Now, how many other people have you talked to in this situation? But guys, there are people that have scratched and clawed their whole career, and someone offers them money they've never even dreamed of before, and I can't fault them for doing it. I've got cousins that put several hundred acres in, and I think they got 12 to $12.50 an acre, okay? I can't fault them. I mean, it's different for everyone. But principal crop acres planted, you see last year, most states planted less acres of everything, okay? And this is an important thing to note, because here's the deal. If you get down there, for instance, Panhandle of Texas, up through western Kansas, there's a lot of folks that will fallow ground, right? And you'll fallow ground, you'll let it sit for a year and try to get it built up for the next year. If this price of corn continues to rally, and guys, this is the highest we've seen December corn for several months, these 25 corn. We were 463 right before I started. We had a heck of a time busting through 460, but if it continues to rally, do you think anybody's going to want to fallow their ground this year? Well, probably not. I don't think that they will. The soybean to corn ratio, as we continue to talk about acres, is at the lowest that we've seen at this time of year in 10 years. Okay, so if soybeans to corn is the lowest that we've seen, what does this suggest for acreage? More corn acres. I mean, that's what it suggests for acreage. And so bottom line is you're looking at corn acres probably being pretty strong. This is your crude oil chart. I took this yesterday after the close. And as you can see here, crude oil has tried to rally up and through $80 a couple of times, but we haven't been able to sustain it, okay? But what has our new administration said that they're going to do with regards to oil? Drill, baby, drill, right? And so if we get crude oil back into the 50s, and right now we're in the 70s, but if we get crude oil back into the 50s, is that good for us as farmers? No. The only thing that's going to be cheaper is your diesel fuel. Big deal. Because you're growing energy. I'm growing energy. We're all growing energy. And so if they do this in an effort to combat inflation, and I feel strongly that President Trump is going to do everything he can to combat inflation, right? Because that's been a talking point forever. It's not the end of the world if they will support renewable fuels. Okay? There's got to be support for renewable fuels. So you look at the value of the dollar. As of the close yesterday, the dollar had been in sharp rally mode. It's finally cooled off just a little bit. And with the dollar starting to come down, what that's done is it's given us a little bit of a boost for commodities. Usually when the dollar goes down, commodities go up. But you're still looking at a 22-year low in the value of the real versus the dollar. Okay, so if you get into this situation with Brazil, if they can come up with some good beans, and the reason I say that is because we've had China reject some cargoes of beans. And they've said, we don't want your beans right now from Brazil. That's a pretty big deal. Why is that going on? Because the quality of their soybeans isn't very good because they continue to get a lot of rain in center Brazil, which is where your harvest has started. But if they can straighten things out, guys, Brazil has a mammoth crop coming. And if you have the value of the real versus the dollar to 22-year low, what does that mean for our exports? They're more expensive. That's what it means, and it's going to be tough to export. And then there's the fund positions. If you look at the upper chart, you took the funds from a 400,000 contract short in the course of a few months to almost 300,000 contract long, and a 700,000 contract move in the funds. I've seen a 200,000 contract move in the funds create a dollar rally or loss in the market. So why did we only go up $1 with 700,000 contracts? Because there was a lot of old corn coming into August. A lot of these guys held on to it too long. Some of you may have. I don't blame you because you typically get a weather rally. I understand that. We didn't get it last year, okay? But you had a ton of old crop corn and you had a ton of new crop corn. And as the funds have continued to buy, we've continued to reward the market. That's okay, but it is frustrating for those of us who sold, quote unquote, too soon. But one distinction on the bottom chart, that's beans. The funds are long beans now. That's kind of a big deal. If the funds decide that they want to get a long position established and go much longer, what does that mean? They're going to be buying so many contracts that the market will go higher. They are a price maker. The rest of us are a price taker, is the way this thing works. And so the funds being long beans isn't such a bad thing. Corn, and due to a lot of the sales a lot of us made, this is the corn farmer's attempt at making money in 2024. All right? I know my wife says that she doesn't like that slide, but she's not here, so we're not even going to tell her it's in there. World corn supply and use. Beginning stocks at 304 at the first of this 2-year window, and then you come out of the 2-year window at 293.3. In simplistic terms, we are using more corn than we're growing. Good or bad? Absolutely, that's good. And I show this because it's a little different when we get into beans. But on the world balance sheet, things look pretty good. You look at the U.S. balance sheet. You're taken from a 1.763 last year to 1.54 this year. There was a lot of changes that were made as far as this was concerned that was really interesting to me. The December report, USDA rarely does anything. They raised demand 200 million bushels. They took 75 of it away in this report. Nobody really talked about that. Why? Because yield was the big discussion. Okay, so they took 200 demand, raised it in December. They took 75 of that 200 away in January and lowered yield. I kind of wonder if they didn't preemptively know yield was going to come down in January. I would have liked to have known in December, but I've never seen them make a yield adjustment in December. I'm just telling you how I feel about it. This slide, don't try to read it, but what I've done is I've taken the 1.54, and this is the spreadsheet that I use to forecast USDA. All right, now whenever you see all these quote-unquote analysts, experts, whatever, trying to forecast USDA, most of the time we are trying to guess what they're going to say. It's not always what we think. We're trying to guess what they say. And so whenever you look at this, 95 million acres is my projection right now. That might be adjusted. 179 bushel yield, this is the second one from the right, gives me about a 1.9 carry. That is not the end of the world. It's still below 2. But essentially what is going on here is that cheap corn did what? What did cheap corn do for us? It increased the demand. It cured cheap corn. That's what it usually does, correct? And so if you say, hey, if we throw all these acres at this thing, we're going to be able to see demand increase once again. I'd be real cautious in that thought process, and here's why. There was a lot of pent-up demand that needed cheap corn to show up, and that demand showed up along with cheap corn. How much more demand can we uncover? I'm unsure. Why am I unsure? Because guys are telling me in Nebraska and especially in Kansas that they're going to start working feed wheat into their rations. You start doing things like that, what do? You start lowering the demand for corn. And so when those conversations start, you got to be a little wary. I'm not bearish, don't get me wrong. It's actually nice to go out this winter and not be called Dr. Doom, because people have called me that for years. Bottom line is, this is a different situation, but I still am of the opinion that if you continue to rally and you don't set a floor or a worst case scenario as you go to levels that you didn't expect to even see, it's probably not a smart thing to do. But that's what my balance sheet looks like right now. Corn acres at 95. I show this because 2 years ago we were at 94.6. Corn to beans, beans to corn guys are going to go back to corn. Why do I think that we might be 95 or above? Okay, I was a couple weeks ago, I was north of Des Moines doing a meeting for a bunch of growers up there. I said, how many of you guys are planting more corn this year? And over half their hands went up. They said, we can see 4 ethanol plants from where we're sitting here tonight, Matt. And one guy said, you know what, we only have about a 65 bushel APH on beans, 60 to 65 bushels. They said, that doesn't work at $10 beans. But he said, guess what? I can grow as good a corn as what you can. And we got a lot of demand for it. And so whenever you're in central Illinois, you're probably going to see a lot of soybeans growing. Why? What kind of yields are we growing in central Illinois? We're very blessed. But not everyone in the country can do it. So I think you get north of I-80, you're going to have a heck of a lot of corn acres. And I don't know where we'll top out. I really don't. But bottom line is, it could be the most we've ever seen. And the most we've ever seen was 96. Okay? It's very possible. Now, I will say, if you get to 96, it's going to be really hard to have close to 180 yield because you're going to pull those fallow acres in, right? You're going to pull acres in that normally don't produce. Now, this slide in November was super interesting to me. This is 6 straight years. What do you notice about this slide, the correlation between the red dots and the blue bars? Any of these years stick out to you as being an anomaly? It'd be the one to the far right, because the red dots aren't anywhere close to the blue bars. What is the red dots? Yield. Blue bars are ears per acre. So what USDA said is we didn't even have the most ears per acre that we've ever seen, but yet we're going to have a yield that's outlandishly high versus ears per acre. And what I said is that if their data set is correct on ears per acre, yield has to be wrong, because you don't see that kind of correlation that far off. Okay, and so now you say, well, what did you forecast? I'll tell you what we forecasted for January, a 1 bushel drop. And the reason is because USDA usually doesn't make gigantic changes. But you wonder, did they make the biggest change ever? No. Biggest change ever was back in 2020. They dropped yield 4 bushels, actually. This was the second biggest drop ever. And so it's not unprecedented, okay? It's not unprecedented whatsoever. You look at, some of these states, us included, had the biggest yield ever. Who got hurt the most? Of course, Eastern Corn Belt. So at one time we had all 3 I states with a 200 bushel plus yield. It would have been the first time ever, okay? Indiana ended up under 200, but Eastern Corn Belt really struggled. One thing to note here is probably not going to affect us in Illinois, but the basis in the eastern part of the Corn Belt is going to be on fire. And part of the reason is it's usually pretty hot to begin with, because whenever you get down into the Carolinas, what do you have a lot of? You got a lot of birds, you got a lot of pigs, and it's a corn deficit area. So there'll be times I'll talk to guys out there that are running buck over basis and I'm 20 under. It just happens. It's the way that it works. What do you think is going to happen when none of these guys were able to raise corn this year? You're going to see basis on fire, but it's probably not going to be enough to draw from Central Illinois. So you look at the stocks situation. Stocks, you look at on-farm stocks. They said as of the report, like 60% plus was in the farmers' hands. I think it's below 50 today. Why do I think that? I'm telling you what, there was a ton of corn sold on the day of the report, first of all. Second of all, that was at 470. Then you go take March corn to 480. There's more corn sold. You take March corn to 490. There's more corn sold. And I think that the farmers hold on to a heck of a lot less corn. When does a real rally typically happen? When the farmer doesn't have corn in their hands. Okay? And so I'm not saying that to be smart. I'm just saying that there is potential if we have weather issues somewhere in the world, whether it's Safrina or in the U.S. Now, if we look at disappearance or how much corn was used in the first quarter, October, November, December is a record. Most we've ever seen. Again, because of cheap corn, cured cheap corn. Now look at this slide. 9% increase for U.S. production since 2015, 83% for South America. Guys, they're raising corn like it's going out of style. Now, people ask me what kind of yields do they raise in Brazil? Nowhere near what we do, okay? But they're adding acreage every year. They say, well, how can they afford to do that? Cost of land's a heck of a lot cheaper, first of all, and their inputs are way cheaper. And so they're going to continue to grow, but this slide really sticks out to me. What's it going to be like 10 years from now? Is it going to be another 50%? It's a possibility. You look at the trend of higher stocks and stocks-to-use ratios in the U.S., how much corn we have. We actually have been raising the last 3 to 4 years. This year is the first year we're going to go down for stocks and stocks-to-use. But if you look at the world, guys, we're on a downward trend. We continue to see less corn available in the world, less corn available versus what we're growing. And with that the case, you are making yourself subsequent to a rally based upon a world weather event, okay? Now, I'm not trying to get you bullish, and I'll tell you what, if you walk out of here bullish, I feel like I haven't done my job. I think one thing that I would say, I'm not here to beat you down. Thanks for the laugh. I didn't really intend it to be funny, but what I'm going to say is this. I'm not bullish, but I think we've got support a lot higher than what we had before, which is a really good thing. But guys, if you go back just a couple of months, let's say 10 to 12 weeks ago, what did it feel like in the ag community? Huh? Pretty depressing. Absolutely. I mean, let's be real. Let's be honest about it. It was scary, downright scary. But things have changed. Things have changed. And so what should we do? Keep perspective. And if we can keep our perspective, I think we'll do a better job of marketing. Ethanol, fantastic. I mean, we've seen really strong ethanol returns. If you look on the lower chart, you got into late November, early December, and what did you see? Ethanol margins got tight. Ethanol margins got tight because of what? Crude was in the 60s. What's crude in the 50s going to do to us? I don't know. I think that if we make it there, it's certainly going to be a big-time issue. As far as exports are concerned, we've got the largest we've had since 2021. And so that's a really good thing. You've got really strong demand from ethanol, really strong demand from exports. Bottom line is we are in a good demand situation. But if we look at the perspective of the world versus us, so South America is exporting more corn than what we are. They have for the last 4 years. And the gap seems to be fairly close. It's different for beans, I will tell you. But bottom line is, we are probably, with the trajectory of their production, we're going to continue to lose world export share. It doesn't mean that we're going to not still export a fair amount of corn, but we're going to have a real hard time keeping world export share. So once again, renewable has to be a big part of the discussion. That's what the March corn chart looked like as of yesterday's close. I do draw a line from back in August. When did the funds start buying? In August. That's why this chart looks the way it does. Now, as you can see, the other more steep line, this market is on a bender right now. And if you would reverse it and start to break support levels, I would be a little bit cautious. Now, today we're up 7 to 8 cents. It's a nice thing to see. But guys, I am a huge fan of rewarding a market incrementally once it's rallying. Because how many of you guys have ever hit the high of the market? Anybody? Just once in your career? Nobody? How many of you guys market every year like you're going to hit the high of the market? A bunch of liars. Come on. What do we do? When the market's rallying, what do? You hold and you get bullish. Just bullish as all get out. Because whatever's driving the market higher is going to continue to drive it higher, correct? And so I'm not saying you go home and you sell everything, but if you go home and you sell today, how much better are you off than 12 weeks ago? A lot better. So I would at least respect this thing and respect it handily. The D's chart also has a nice uptrend, and we broke through this 200-day moving average, which we hadn't been above since last summer, as you can see. That's the yellow line. Bottom line is, D's corn looks good. I mean, there's no question about it. So let's talk soybeans, and then we're going to wrap at the end on some profitability stuff. World soybean production, of course, it's up 30 million tons. A lot of this is due to Brazil. No doubt Brazil is forecasted to have a very large crop. World soybean supply and use, though, if the USDA is correct, the first of the 2-year window, 101 million tons, you come out of this 2-year window at 128 million tons. Guys, that's a 27% increase in world stocks of soybeans in 2 years. What would that typically necessitate to happen? Down. But maybe we've already seen the down in preemptive fashion, right? Maybe we already saw this coming and we already had enough down. It's very much possible. But bottom line is this. If Brazil straightens out, you're probably looking at enough world bean stocks to keep yourself from getting super bullish. Okay? The other thing that it could do is the bean market could act as an anchor for everything else, is one thing I'm concerned with, and that's why I don't want to get super bullish here. U.S. soybean supply and demand, really interesting thing is that with the corn balance sheet, they made all kinds of changes. With the soybean balance sheet, all they did was drop yield. No demand adjustments whatsoever. And so typically, whenever they go ahead and they drop stocks numbers, they'll also drop demand, which is what they did with corn. They didn't do so with soybeans. I think the USDA is a little bit concerned, to be honest, about what a lot of people are concerned about. When it comes to soybeans, with the new administration, what are people most concerned about? Tariffs. And so I think the USDA tipped the crap here. It's just a guess that maybe our demand is going to get worse. Okay, now, the only way that happens is if Brazil has a good exportable quality. And if we put tariffs on, what do you think the thing that China will do? What do you think they'll do if we put tariffs on? What'd you say? I think what they'll do is they'll cancel soybeans that they've already bought, okay? And you say, well, how can they do that? They've done it for years, and they're awfully good at it, okay? My dad always told me, we're in the elevator business, he said, whenever China cancels soybeans, they'll be back buying them within the next 7 or 8 days. It's just the way it works, and they're going to buy them cheaper from somewhere. And you ask how, and we could go through a whole hour of how that works. But it is a possibility, and they wouldn't do it if it wasn't a good economic move, okay? There is, of course, a penalty, but my supply and demand balance sheet, I'm at 84 million acres, but I don't know. If you see right now, corn's up 7 or 8 cents today, beans are up 10. Usually you would expect beans to be up a lot more than that whenever corn's up 7 or 8 cents. Beans are struggling to rally. And so a lot of people are going to say, man, I just don't know if I can do this bean thing, especially, like I said, in other places. I think there's a possibility you could get bean acreage low enough that you could get support for the bean market down the road, okay? And so one thing I'd say is that a lot of folks are looking at $10 cash beans or 10 and a quarter now, maybe, depending on where you're at. It still doesn't work very well. Do I want to lock something in if I know that I can't make money on it whenever I'm probably in like the second inning of this game? I don't know. I don't think that I do. And so while we've seen a rally, and I'd like to respect it, if I was going to do anything, it better be flexible, okay? I want to have maximum flexibility here. I think soybean yield and corn yield, both trends, are going to be super interesting to me whenever we come out with these baseline projections. Why? The last few years, the USDA has really jacked this yield up, okay, both corn and beans. In my opinion, after the kind of summer we had, yes, it was a dry August, but at the same time, you would think maybe yield is not going to be quite as robust as what they'd said. I mean, you look at this trend, but bottom line, we're still 204 million bushels larger than what we were a year ago with overall yields. Your trend of higher stocks and stocks-to-use ratios in the U.S. is still intact, and in the world, it's very much still intact. I mean, if Brazil has what has been forecasted, and there's no way to know. Guys, they've got a big crop. It's just a matter of what is the quality of this crop going to be? Is it going to be exportable supplies? And you know as well as I do, not every area in Brazil is going to have issues with quality. But if it's as big as the USDA suggests, it'll be the most beans we've ever had in the world, okay? And it could be the most stocks to use. And I talk about that a lot. Let me just explain it. COFCO has a facility in St. Louis. COFCO is Chinese owned. If I'm a grain buyer at COFCO on St. Louis River, and I see the most stocks to use, the highest stocks to use ratio we've ever seen for soybeans, what is the incentive for me to push bean bids? None, okay? And so if this does come to pass and Argentina doesn't burn up and Argentina loses some production but Brazil raises more than they've ever raised, which is currently what most people think, you're going to have a bearish situation. Now with soybeans, it's a 42% increase for South America, 11% for the U.S. And you say, well, why is corn so much more? Guys, they really haven't started getting super aggressive raising corn until the last 20 years. All right, and so soybeans have been around a little bit longer than that, but you know, bottom line is these guys have made generational wealth in the last 10 years. If we're fair, last year they didn't have such a great year, but at the same time, whenever our bean prices dropped like $2.50, you know how much less they got for beans? 30 to 40 cents because of currency. And so clearly, it was a tough year for them, but it wasn't as tough as what it was for us as far as haircuts go. So right now, the U.S. farmers walking along, and you've got this gigantic Brazilian crop, but everyone wants to look at, hey, Argentina's going to have a smaller crop. What am I trying to get at here? What do you think this Argentina weather situation, what do you think it's providing for us? A rally, which is a opportunity, right? What if you come in Sunday night and they say, well, this Brazilian situation's blown over and Argentina's forecast looks better. What do you think's going to happen with the soybean rally? You take the stairs up, what do you take down? Take the elevator down, right? And it's usually not one of those Hampton Inn, slow ones. I'm talking one like the Hancock building, you know. I mean, that's the way this thing usually works. And so I'd be really cautious in not taking advantage of it on some bushels. Now look at this. Export sales over the course of time. South America is essentially 3 times larger than where we're at with the U.S. Now let me ask you this. Whether we're talking corn or beans, do you think that the U.S. is going to gain world export share in the future? No. The problem is that we're not going to grow more. It's very unlikely that we're going to grow more to begin with. And we know that they are going to grow more, okay? And so the tough thing is that if we don't, once again, have some sort of a commitment to renewable fuels, we're in big trouble. You look at crush margins are currently around $1 a bushel, and so you're crushing beans, getting meal, getting oil. In the past, it was all for meal, trying to find a home for oil. Now we've got a home for oil and meal, but the unfortunate reality is that there's a lot of give and take. We don't know what the commitment's going to be for soybean oil going into renewable diesel, but with crush margins at $1, there's been a ton of crush plants open in the last 3 years. It's slowing down some, but a ton of them have opened. And so if I'm an originator or someone who buys soybeans and we're making $1 a bushel, what do I have to make sure happens? I don't run out of beans. And I've got beans bought for fall. It's a really good thing for those that are close to a crush plant. As you can see, soybean meal has posted a nice little rally. It's hard to see at the far right, but soybean meal's been straight up this week. We rallied 2 days ago, $13. Yesterday we were up again. The soybean oil market is stalling. Why is the soybean oil? Let me go back to middle of fall. You can see that spike there for soybean oil. That's the one on the bottom side. Why did it stall? Why did we rally to begin with? Let me go over both. Indonesia and Malaysia had a junk palm oil crop this last year. And soybean oil and all world vegetable oil prices were in rally mode, partially because we're using a lot of vegetable oils and we're using a lot of soybean oil in the making of renewable diesel, correct? California comes out and says, oh, we only want 20% of seed oils in the formulation of this renewable diesel. All world vegetable oil prices crashed. Why did we rally again? Used cooking oil that's imported is not going to be qualified for the tax credit. That is the reason why you've got soybean oil kind of woke up once again. You can see crush and exports. They're heading in different directions. The green line's exports, yellow line is crush. It's continued to grow. It's going to have to continue to grow, and that's all there is to it. There's your soybean chart. As far as March beans are concerned, we've waited a long time for a rally like this, but go back to the August-September time frame. What caused that rally? A dry situation in Brazil is what caused that rally. And we talked to some of you, oh, you guys all know Eric Snodgrass, but we talked to Eric, we had him on our webinar, and he said, they're dry in Brazil, but guess what? It's their dry season. So go figure, and he said, everything I'm looking at from an environment standpoint is that they're going to get plenty of rain. Okay, so that rally that we're currently seeing, in my opinion, looks very similar to the rally in August and September. And so what am I saying? You can take that rally away very rapidly if the weather normalizes. I don't know if it's going to or not. But hedging risk is typically you hedge some of your bet, and maybe you hold on to some of the rest of it. Look at November beans. It's a very similar chart. Can you get back up to that level that we saw back in October, which was around $11? I think it's potentially possible, okay? Now, how many of you guys have done your profitability calculations for 25 corn and beans? How do they look? Better than what they did, right? But they're no beauty queen, I think would be a pretty good way of putting it, okay? Corn looks better than beans, I think, for most of us, okay? And so whenever someone comes to me and says, yes, I'd like to hedge off risk on some beans, I just don't think that I can make these prices work. I totally get it. Again, we're early in the game, so be careful. So we're going to talk managing risk. I've been using this slide for a couple years. I absolutely love it. It's Tesla's roadside assistance vehicle, fueling up at the gas station. And I'm not anti-EV, guys. I'm not. But here's the thing. Who do you have aligned against EV? Who's against EV? Big oil. That's a big deal, right? But we've got someone who's fairly influential in this new administration that is, kind of a big deal when it comes to EV. But here's the deal. You got big oil, you've got renewable. Big oil invests in renewable. Why? Because renewable was displacing conventional diesel, and renewable allowed you to have a tax credit. And so big oil is a huge investor in renewable. Big oil actually gets along with ethanol a little bit better than they used to for the same reasons as what we see, because they see these renewable fuel standards. They're hopeful something good will happen there. I'm hopeful too, but guys, right now I'm concerned. I can tell you that right now. This whole 45Z fiasco in the last year has been a joke, and that's all there is to it. We should have known well in advance of our planning for the 25 crop whether we were going to be able to have certain practices and have corn go to an ethanol plant and be able to get this credit, right? And so I'm frustrated with it, but we've got to hope the new administration has some common sense whenever it comes to what it's going to take to keep rural America from major issues on down the road. Because guys, if we're going to lose export share, it's a problem, a big, big problem, if we don't have renewable fuels. That is all there is to it. The Department of Energy says we're going to hit up on a wall. Yes, you've seen massive growth. Whenever you look at this renewable diesel plants, these things going in place, why would people not want to invest in them today? They don't know what the administration's going to do. And you're talking big, big dollars that go into these things. There's that used cooking oil I wanted to show you. So the used cooking oil coming from China dominates everyone else, okay? If they no longer get the tax credit, are they going to be sending it over here? Extremely unlikely. And you say, well, if they've got all that used cooking oil sitting around, they may as well do something with it. Guess what? They could send over a cargo of 1% used cooking oil and the rest of it virgin palm oil and call it used cooking oil. It's dead serious. Were they making money doing it? You darn right they were. They wouldn't have been doing it. And so I think that this could change the scope of everything. Let's talk a little bit more economics here. Let's do weather first before economics. All right, so if you look at the left, that's essentially what the weekend rains look like for Argentina. They were forecast to be better. That's at the far southern tip, not at the tip, but farther south in South America. You can see, though, heat is still a bit of a problem, and so you want to look at the forecast. And the forecast is that they're going to get some rain in Argentina, and that's where that glob of light green stuff is. But heat's still going to be a problem. Part of the issue that I see is that you still have the center part of Brazil getting a ton of rain. And so if that doesn't change, that could be supportive to the market. I don't know what the weather's going to do, though, so we'll see. This guy says, of course, I haven't made a payment on the tractor. You said it would pay for itself. So when it comes to equipment, I'll tell you what, this was going to be a major buyer's market. Was going to. I think we've stabilized a little bit. But you guys see some of these auctions in November and December, what some of this stuff was bringing? Holy smokes, it was a buyer's market. That's all there was to it. I still think it could be a buyer's market, but at the same time, I think we all have to be super cautious about what we're investing right now. I think we've got to be very cautious about our ratios, about liquidity. Bottom line is, do you guys think that this downturn in the ag economy is over? I hope, right? But I don't know that we can say it resolutely, correct? And so I'd be very cautious. Now, I will say, this little spiel about equipment, when I talked for Case IH at Farm Progress Show, I didn't talk about this particular stuff, okay? But bottom line is, I guess you got to know who you're talking for, but I personally am very, very cautious when it comes to equipment right now. How much new equipment is selling? I don't know of any. I don't know of any. And they're stuck. It's a tough spot that they're in, right? Used equipment's going to sell pretty good, though. You look at the ag economy barometer. All right. We saw a spike right towards the end of 24. What was that due to? In the optimism. All right. This is like an optimism indicator from Purdue. Ag economy barometer. What was the spike due to? Anybody know? The election. That's what most people say the spike was due to. Okay? So let's take one step forward. This is index of current conditions versus the future expectations. How do we feel things are going to go versus the reality of today? And you look at the reality of today, and it's not very close to our expectations. Okay? And I'm not picking on anything. What I want you to notice, though, is that disparity. There's only one other place on that chart that I can really see the same type of disparity. When was that? 2016. What happened in 2016? Same person was elected. And I'm not anti-Trump. I'm not going to say that, guys. I think that there are some possible really good things that can happen these next 4 years. But what I'm going to tell you is that sometimes we get our hopes way too high. I've told people, if Trump's your guy, do you think he's going to solve all your problems? Because I don't. I don't think any politician's going to solve all your problems. And it's no offense, sometimes they make life more complicated, actually. But I don't think anybody's going to solve all of our problems. But I think it's a very important distinction that most people think things are going to be significantly better than what they currently are. All right? It just goes with marketing. Is that not how we market? We think we're going to be significantly better than what we currently are, instead of just stopping and taking a look at how much can I make today versus what I could have made 12 weeks ago. Because if you do the math, it's significant. All right, now how likely are tariffs to occur? About 50% of people think tariffs are going to happen. And once again, here's the deal. China's economy is not near as good a shape now than what it was back whenever they originally put tariffs on the first administration. You're likely to see tariffs happen. Because why? Not as worried about retaliation. China can't afford for us to not buy their products. Who's the number one consumer of everything in the world? The U.S. We don't have the most people, but we sure buy everything, right? This came out in the middle of fall. Cash rent, farm ground, we were going to be losing 2 years in a row, losing money. This came from Farm Doc. This is great data. It's from FBFM. It's not like they pulled this out of their hat, okay? If we want to quantify, it's the region we currently reside in today, and they said that the average grower in a 50-50 rotation, if it's cash rent farmland, was going to lose $130 an acre for 2024, all right? $353 an acre cash rent, okay. Here's what I'm going to say. What was an average yield for this region, you guys think? A good average yield. It's the best region in the state. 230, 240. How much has the value of cash corn come up since the harvest low? $1? $1. Okay. So you got 230 bushel corn. Yes, there's been some of it sold, but 230 bushel corn, prices come up $1. U of I said we were going to lose $130 an acre. This is based on actual farms, FBFM. But yet people are calling me every day right now saying, you know what? I knew I told you that I would hedge off corn if July corn got to $5. How much higher do you think it can go? Right? Sometimes I think we need to stop and take a look at what did this thing look like on October 20th. Once again, we were scared to death. Okay, and I'm not saying you go sell everything, but I'm saying if you can actually keep your head above water for 24 when you didn't think there was a snowball's chance that you would get to, you better do it. And then start focusing on new crop. It's just my opinion. They also said cash rent might come down just a little bit, which I think's interesting. I mean, I don't know of anybody that told me their cash rent's come down. I don't know. Landlords know that 21 and 22, from a university's perspective, they'll tell you this, it was the most profitable back-to-back years most people have ever seen. And so cash rents are not coming down anytime soon. We're about to wrap up. Was there a fertilizer shortage in 2012? Looking at this chart. What do you guys think? Was there a fertilizer shortage? You guys know as well as I do there was no fertilizer shortage, and if it was a man-made one, right? What happened in 2012? $8 corn happened in 2012, okay? Why did 22? Why did we rally sharply in 22? Why was the value of fertilizer equal to the value of chemical and seed? Because what? Absolutely, because they can. And so once again, the next time, here's the deal. Well, next time you get the luxury of paying way too much for fertilizer because corn prices are high, what should you think about doing? Sell some corn whenever the ratio of fertilizer to corn can't strangle you to death. It hurt us in 23. It hurt us in 24. We got to be very careful not to make those same mistakes over again. I don't want to dwell on this, but essentially, phosphate's not coming down, guys, anytime soon. Potash is still pretty cheap. What anhydrous prices have you guys seen? 750? 7.25, 750? Yeah, I think it's pretty common. What do you think is going to happen if D's corn goes to $5? Why would it go up? Because D's corn goes up, because it can. Understand that. Understand the relationship. Corn expenses soar. 2018 through the forecast of 2025, you guys can see as well as I do. Interest on operating capital goes up 145%. Okay? I know some of you paid way too much in interest in the past. How many of you paid 18% or over 15% in your career at some point? And I know that that's no, you feel like, I don't even know if I want to raise my hand, but guys, I want to shake your hand because you made it through. It's tough. My dad made it through as well. It was a hard deal. But I talked to my dad about it, and it was either in 84 or 85, he paid 18% on his operating note, okay? I said, how much did you borrow? He said, $50,000, okay? $50,000 was a lot of money back then, right? The interest, though, would be around $9,000, correct? If it was borrowed the whole year, and I'm afraid those years we had money borrowed the whole year, okay? Just in talking to him about it. What would you say in this room here would be a good average operating note today? Huh? 8%, but how much money? 1 million is a good average. I agree with you. How much interest is involved there? $80,000. If I'm looking at break-evens, if I'm looking at cash flows, if I'm looking at trying to figure out where I can make money, if I forget about the interest, guys, $80,000 is a lot of money. I'm not saying it's the 80s again, but what I'm telling you is when the interest on operating capital goes up 145% in 7 years, we better watch what the heck we're doing. We got to be careful because the markets look good today. But how many times in the past have we been sitting here and the markets look pretty darn good, and then you get the rug pulled out from under you for a reason none of us even knows coming? And so I want to manage risk as we go. Put a floor under the market, and if you put a floor under the market and the market rallies, best thing that can possibly happen is that the put expires worthless because corn went up. But if you don't put a floor under the market, and then the market drops like gangbusters, you're going to be madder than God's creation that you let a rally go by. I said something on Market to Market 2 weeks ago. I said a gift is not a gift unless you do what? Unless you accept the gift, right? And so we've had a gift given to us. And I know we're going to run short on time. I've already covered everything. We can do questions, though. Do we have time for questions? Caitlin gave a thumbs up. Yesterday, she's like, not really. But if you want my presentation, you can do the QR code. There will be no obligation. You're not locked into anything. You just get the presentation. And then if you want to get any of our research or anything else, you can get signed up for it at your choosing. There will be no cost or anything like that. I do ask if you get the presentation that you don't redistribute it, though. It does take a lot of time to put it together. Questions? Yes, sir.
Matt, when will, or is it already happening, the 95, 96 potential million acres of corn start weighing on wheat?
Well, that's a really good question. And when you see a day like today, when March corn is up 8 cents and D's corn's up 3.5, that's what's going on. So they've been bull spreading the market. And what I mean by bull spreading is the front months are gaining on the deferred months, okay? To explain it further, when the funds are buying corn or beans, they typically buy the front months, okay? But the other thing that it tells you is this. If they're buying front months and they're not buying the deferred months, there is some skepticism as to how high December corn can go. And so my fear is that if you get into, for instance, they start getting the safrinha crop planted. Right now, they should be planting some of it. It's too wet, though. Okay, they can't even harvest the beans, so they can't pick the corn or plant the corn. If you do normalize that, then you're going to start talking about big acres. And I will tell you, I've seen some private estimates, just not published, but different firms thinking that you could outdo the biggest we've ever seen. Biggest we've ever seen, again, is 96. So it's very possible. But I do think that it's going to be a bit of a weight on new crop prices. That doesn't mean we can't rally, but I think that it's going to hold it back a little bit, at least versus old crop prices. Other questions? Nobody has a question?
You had mentioned Chinese cancellations. Is there any impact on their purchases have been for their government inventories?
Yeah. Okay, so the rumor with them saying they don't want some of these soybeans from Brazil, it certainly has given a little bit of a boost to bean prices. And they announced this morning that they were going to auction off some of their reserves. So why would they say they're not buying them off Brazil? To make money and to sell their beans for a higher price. And you say, well, that's a crappy way of doing business. And I'd say, guys, they're great marketers. Always have been great marketers. They're really good at what they do, okay? But yeah, there's no question right now as well, they're actually running a little tighter on supply than what they would prefer because they don't want to buy off the U.S. unless they absolutely have to. And so they've been waiting on Brazilian soybeans. Guess what? Right now, the first beans coming in aren't in very good shape. They said supposedly they had some pesticides that they discovered in some of these shipments and just off-quality beans. They could be in a quandary here. Certainly. Any other question? Huh? It's very possible. It's very possible, especially when they kept getting rain like that. You know, I mean, I don't know about you guys. I didn't even touch on this earlier, but part of the reason that you saw such big yield drops was what? Yeah, moisture. Dry August. Dry August didn't just lose us bushels, it lost us dry matter. And so I had a guy from Nebraska sending me pictures and videos of, he was picking 11% corn, and it was of no fault of his own. He couldn't get to it. And he said he hadn't picked anything above 12% for a full week. Now, how much money does that cost you? When we were in the elevator business, you go from 13% beans down to 9%, and it's 3 to 4 bushel an acre is what it costs you. That's substantial. And so we lost a lot of dry matter. I mean, guys, we can haul water to town, is what it boils up to. I mean, it boils right down to you can haul water to town up to 15%. Above that, you're going to get penalized. But when it gets below that, you've left money on the table. And it's of no fault of your own. How many of you guys pulled into your first bean field this year thinking it was going to be 14, 15% and hoping they'd test by the afternoon, and they were 11.5? And you're like, uh-oh, got 400 acres of these bad boys to cut. This is not going to be good. And that's what we dealt with because of the dry August. Other questions?
You mentioned this 10-year window in South America. I saw an article the other day about trying to shift the higher corn regions to go more north. Is that going to adversely affect South America's growing window?
Well, I mean, you would assume that their best growing region would move towards the south, right? And coincidentally, they do have less acres towards the south. So I think it's certainly a possibility. I mean, I'm no expert there, but I'm assuming that they're going to continue. I mean, they've got they're not taking rainforest out of production, contrary to what people say. It's called the Cerrado. It's like a wasteland. And you want to know how many acres they've got that they could still conquer? It's like 400 million acres. Now, will they do all of that? It's very unlikely that they will. Economically, it's probably not going to be feasible. But one thing that I left out today is these guys are going out there and they're buying farm ground, planting it the first year, getting like 45, 50 bushel beans. And they don't even know how they're going to get them to port yet. They're just hoping for good weather. Who's helping them figure out how to get them to port? China. And did you guys see what China announced they were going to do in South America? Huh? They're building a rail through the Andes Mountains. Why would they do that? They can take them off the west coast. It's a direct ship line. And now they don't have to go around the south end of South America or go through the U.S.-owned Panama Canal. I don't know if we're going to take it over or what we're going to do. I don't know. But it's interesting. If they said that they're going to do that, what are they going to do? They're going to build a rail line. You guys know that as well as I do. All right, I know we're about out of time. Is there any other questions? Yes, sir. Mexico is interesting in that we have a lot of rail that's built specifically to go to Mexico and to get our corn down there, and it's very efficient, and it is their cheapest corn that they can source, okay? I'm concerned, though, if we start slapping tariffs, just like anybody else would be. I'm concerned as far as Canada goes, we get a ton of potash out of Canada, and it's cheap. And so I'm a little bit concerned there as well, but there's just no way of knowing. I've been telling people the threat of tariffs and the implementation of tariffs are two completely different things. It's a negotiating tactic, right? They're trying to figure out who can call whoever's bluff first and how much pain can be inflicted before something bad happens. And so I don't know what's actually going to happen. I know there's been numbers floated here in the last couple of days and a thought of February 1st, but there's been no official action taken yet. So we don't really know what's going to happen. Guys, I'm not going to go anywhere. I'll go ahead and eat today. I'll be around. If anybody has questions, my contact info's there, but guys, you can figure out how to get a hold of me. It's not too hard to get me. Last thing I've got is my risk disclaimer. You cannot hold me liable for anything that I said this morning. Thank you for listening.